George Webb with Bode. Pooja, I heard you say that you're not investing any capital into these firms, so why are you guys doing it, and how do you justify it to your shareholders?
That's a really good question. So, you can imagine, like we said, all innovation doesn't come from inside WSP, and it never will. But we also know our clients are looking for innovation. So by virtue of these relationships, we are also staying on the cutting edge by bringing to them what we think is the best in the market. So that's the way we justify it. And I think it's important to kind of approach that with that humility, is that we want to bring the best solutions to the market, and this is a mechanism for us to stay on top of the best solution and partner with the best solutions.
Kind of building on that and then connecting with Parker, I found it quite interesting how you say this is the strategic focus we care about, and Parker said, we'll see what comes our way. Yeah, I can see the value in both of them. How do you actually establish a strategic focus? What's that like? Is that very easy? Do you have a survey of everybody in the company, and then, yeah, how do you do that? And then, obviously, there must be something in the evaluation still you must think about, or, yeah, we can come to that question to you, Parker, after that.
Absolutely. I think there are two reasons for this strategic focus. One, it makes the application evaluation straightforward, and we're kind of going in one direction. The other thing is that in finding the strategic focus, we are actually getting buy-in from our leadership that participates in finding the strategic focus. So early on in the process, before we even go out to the world, we actually have buy-in from the leaders who are going to make these relationships successful. If we go out and solicit for strategic focus area that nobody in the companies or our clients care about, it's very hard to support those relationships. So it's about getting alignment, is what that strategic focus is, between what our clients need and our folks need. And we do it through live workshops, whether they're virtual or in person. And it's active engagement with all those people who are going to actually vote on the pitches and make the decisions about who's going to get selected.
Yeah. And I was wondering, yeah, if you have to go from 25 to 10, do you give them like these are the 12 criteria you shall use, or just whatever you think, or somewhere in between?
Yeah, no, we definitely set up a pretty, I guess I'd say it's a pretty standard venture scorecard that we ask all of our partners to use. And I think from our standpoint, we just try to architect a relatively diverse cohort. We don't want to have 6 of the 7 companies be robotics. We don't want to have 6 of the 7 of them be a digital collaboration and job site management tool. So as long as we feel like we're spanning a little bit more of the gambit there, we're pretty comfortable with it. I think a big part of what we find out when we're going through the applications too is that we actually become privy to a lot of problems in the industry that we maybe didn't know exist. Especially when you talk with supers and PMs and folks that are constantly doing things all day long that don't maybe have a chance to suck themselves back out of their current problems. It's really refreshing, I think, for a lot of them to say, hey, you know what, yeah, that is a problem. I didn't realize it, or I know of a job site that's struggling with that right now. So, yeah, we use it a little bit more as a barometer of where we think the industry might be going.
If I can just add one more thing there, I think the other criteria we're using the strategic focus finding is where is the money? So if we know the Inflation Reduction Act that came out next year, it's going to flow money in a certain direction like energy transition. We know there's going to be a big boom in that market. And so that we are better positioned to be helping in that market. So that's another criteria we're actually using, is where is the money in addition to where the market is going in general.
I guess, yeah, maybe I should say that the only thing that's different about our scorecard is the last question is, will Suffolk and the Boost partners be able to add substantial value to this company? And that's the most heavily weighted question. So I think that we are trying to position the program to be value add back to the industry as a whole. If we wanted to just purely make money off of the program, we would have different investment terms than we do. So it's really important to us that we feel like we're adding value back to the companies that are applying and giving their time to be a part of the program.
Yeah, how is that for you guys, Patrick? I know LCN Digital came from inside Dresden Sommer. Was that the case? Sorry if I missed it. For the other innovations you shared or the other ones you have in your portfolio as well?
Yes, they came from inside, or as I showed with this vision and foresight. For example, we create, or this BIM stuff was from the foresight, and then we searched on the market for a startup that we could acquire and take in. But they are corporate startups, so they normally belong 50% plus to Dresden Sommer.
Yeah. Okay. So quite a different strategy from.
Yeah, we also follow the same strategy that you also follow. I haven't shown that, but that is helping more the core business. This is not changing what I showed with the new ventures that we are trying to achieve, or this new digital business models that we're trying to establish. So we follow the same way to bring the digitalization idea, new technologies into our existing core business, and partner up with startups. So we do the same also.
Yeah. But I shouldn't monopolize the conversation here, sorry. My colleague Ray Levitt. There's microphones.
Thank you. So question for Patrick. Patrick, when you incubate these companies internally and then they start to sell to other companies, do you continue to own a significant chunk of the company? Because if you want to get outside investment from venture capital people, it's often a challenge if the founders don't own enough of the company to be really motivated.
Yeah, as I showed in this transition to add digital business models to Dresden Sommer and change the business model of Dresden Sommer as a whole, it's important that we still own these companies. Yeah, it's not an investment in a company where 50% plus are owned by the founders of the company. So it's different. It's a corporate startup. They have virtual stock options. So they have 20-30% as a founder team in these companies. But we're not looking for VCs to invest in these companies. We have some of them where other strategic partners have invested in. So the one that I mentioned was Elson Digital. It's a strategic partner that is investing into this company so that we follow the same vision and the same idea. So these companies are not made for investment for a VC.
Hi, Antonia Soler from Hilti Group. Thanks to the four of you for presenting about the great programs you are running. So could you share a bit more about executive sponsorship, maybe for others who might be thinking to set up the same, how it started, how to get the buy-in, and then also how to keep that going in the whole organization?
Yeah, maybe should we start with you and Aaron online? Thanks for joining us again with this question. I imagine that there must be discussion at Caltrans as well.
Absolutely. So it's top down, bottom up. So for anything new and innovative, you have to have support from the very top. For us, for like our VDC, or now we started out calling it VDC. Now we call it BIM for I to align with Federal Highway Administration nomenclature. But that particular effort, for example, really had some initial case uses at the very ground level. So it was a few people strategically in the field that were trying to implement three-dimensional technologies. That gained some traction. It elevated itself up to the level of chief engineer, who at the time was Michael Kieber, who is now our deputy director. He was very much in support of that. And as such, he has created policies and some of our mission vision goals that tightly align up at the top. So it's that sandwich approach. And that's the only way that we've really ever seen much success with this. Because Caltrans now has done VDC or BIM for I think about 3 times now over the past 20 years that at least I'm aware of. I've seen some old charters going back to the late 90s of people having this idea that we need to go towards three-dimensional plans and whatnot. And there's been false starts over time. And it was always because it was either only top down and you never had the bottom up, or it was the opposite. It was bottom up and there was never any support from top level management to provide, again, the appetite for risk and the funding needed to be able to, implement new technologies.
How about from the panelists here?
Yeah, I think it's really important to have somebody at the top or in the executive group that's bought into what you're doing. this is going to sound mundane, but I also think that it's pretty simple. But I think defining what you're trying to accomplish in the program and then making sure that you're feverishly reporting on that, and so the right people are seeing that you're hitting your metrics, that you're making the waves that you're trying to, is really important. And then for us, a little cheat code is hooking on to the startups because they bring a ton of energy year in and year out. And that's really important for a program like this that can often, get sluggish if it's maybe with like some more mature companies, or if it's like two large corporations working together and things get bogged down and move slowly. We move really fast and break a lot of things. That's why we operate separate from CIFE Construction. It allows us to kind of hum at our different cadence, which is addicting for the folks that are at a big construction firm to be around startups who are moving and operating really at a high pace and a fast clip. So I think that's super important to us, and that's a testament to all the startups that apply and come through the program.
The executive buy-in at large corporations is really critical. That said, Emerge started as an experiment, really, to see what it can do. And 3 months in, we started to see success. And I think the moment we start seeing success, executive sponsorship is not very hard to get. Budgets are not very hard to get. The important thing for us to actually define the KPIs for the program and make sure the executive leadership was on board with those KPIs that we define. And as long as, like you mentioned, we are reporting back on these KPIs and showing the success, the consistency of the sponsorship continues on. This is also where the alignment of the strategic focus of the program and the cohorts with the strategic 3-year plan of the company starts becoming critical. The moment we start connecting those dots, it's easier to get executive sponsorship. And those 3 years plan are very thoughtfully crafted for the growth of the company. So we tend to give a lot of weight to that, in addition to also keeping an eye on the trends. And the Emerge team actually looks at the trends every 3 months and connects back with the leadership to see where we are connecting the dots, where we are not connecting the dots, and making sure we are staying in alignment.
Just a quick question. I think, gentlemen from Suffolk, I think you were very generous saying that we as an industry are spending 1% of our annual revenue on R&D. I think it's far lower than that. But in all honesty, did any of you, this is a question for a panel, ever consider internal self-funded R&D versus partnering with startups?
So I'll put my Suffolk Construction hat on. Yes, we have done some internal R&D. And I think, again, talk about maybe the alignment of interests and what you'd expect the end goal to be. We have gone down the product development route actually a couple times. And you think that the spend is X to build a product, and then you realize that there's maintenance fees associated with that, and you have to keep an engineering team on, and the costs start to add up, and really quickly it becomes very unappetizing. I also think that there's a big jumping off point where if you develop something internally, you have to be very clear up front. Are you going to commercialize it and sell to your competitors, quite frankly, or are you going to keep it internal as a tool that just fuels your own fire? I think thinking back to Rob Atani and Thornton Tomasetti's concept, like, they've built out 20 some odd different tech solutions. They're selling some of them, keeping some of them core to their own business. And so striking that balance, I think, would be really important. But yeah, we have tried with our own internal R&D. And I think that part of the reason why Suffolk Technologies was stood up is that we felt we had the most impact and the quickest impact by doing it with external partners.
But I think what we've seen is, you work with partners, Aaron, but there's a large internal effort I gathered from the team you mentioned, putting all of the pieces together.
Correct. Yeah, we, in a larger sense, we actually have an entire division that's dedicated towards research. It's called DRISI, or Department of Research and Innovation, and Systems Integration. That group, I think, has something like 60 or 70 employees, and they manage a lot of university research. So I think the latest stat that I saw was something like over 200 different research projects that were being funded through the DOT for universities to conduct, kind of next generation type research. I think I'm running a couple of them right now. One of them through UC Davis. It's looking at artificial intelligence to be able to extract features from ADA ramps. So everybody sees in in the United States, the Americans with Disabilities Act was a really big deal. It was passed back in the 1970s, actually. And compliance with that has actually been somewhat difficult. A lot of our processes are manual. So, working towards things like that, in some cases, there aren't commercial products that can do what we need them to do. So we'll reach out to universities to actually, fund that and see if there are technology solutions that we can have them develop to be able to do things like that for us.
So we are at time, but if you promise to be really fast, then we can do a couple more. And volunteers, you have to get the microphones. So very fast.
Okay, I had two questions, but I will do just one.
Yeah.
So, okay, my name is Jose Vidal from Peru. I had a question for Patrick. So we have seen how we can implement disruptive innovation in governance. I wanted to ask you, how different do you think is, or where the gap is to enhance disruptive innovation in smaller projects or smaller companies, or even in smaller markets, smaller and stagnant markets from emerging countries? Thank you.
The question was how
different it can be to enhance disruptive innovation in smaller companies or even in smaller markets from other countries.
I don't know if I get the question right, but the problem in big corporations is that there is the structure is set, and the people in the company have to lose something if they help the startups, help the new ideas, so if you have a smaller group, then it's much easier to bring everyone on board and to get everyone in the idea, because it's a lot of communication, and you convince these people. But if you have a big corporation, it's a lot of work to convince everyone and take everyone on board into this, because first of all, it's like they will try to resist, and then you have to convince them really to get them on board. Okay.
So my question is to Aaron Caltrans. I'm Stefania Aaron from Brazil. So as you are owners, I would like to know, how do you involve the others? So as you internalize 90% of the project, if I'm not mistaken, so how do you get the others involved, contractors and so on, if you have a typical, template for the contracts? I don't know.
Sure. So, we have a variety of industry partner groups that we run. So we regularly meet with, there's actually an industry partnering group that I believe has monthly meetings. It might be bi-monthly, with industry that involves, industry or organizations like AGC and others to get feedback and solicit that feedback on our projects. What is working in our designs, what is not. And that's actually how some of these new processes like our CMGC process have actually been able to be enhanced, is through feedback from our contracting community.
So, we should formally end this session since we're a little bit over time. Please thank the four speakers for showing us. Okay.